In our last session, we finished up with a purchases journal and didn't quite make it to the example exercise. But this is example exercise 5-3, and it's located on the bottom of page 213 and the top of page 215. In this one, you can see we have 3 transactions, and they're telling us to record those in the purchase journal. So if we look at our purchase journal on October the 11th from General Supplies, you can see we bought $235 worth of supplies on account, and so we have a debit to our supplies account and a credit to the accounts payable. Then on the 19th, we bought $110 worth of supplies from Hubble Supplies, and so we have a debit to supplies and credit to accounts payable. And then on the 24th, we bought some office equipment. Now, anything other than supplies will be in the other accounts column of your purchase journal. And you can see we bought $850 worth of office equipment, and it has the post reference number of 18 out by that, and that's because we post to the office equipment general ledger. Anything in the other accounts column, we post the date it happens and go ahead and put our post reference in. The other ones, remember, we would post directly to the subsidiary ledgers on the date that it occurs and put check marks in the post reference column, and at the end of the month we total it up and have one debit to account to supplies and one credit to accounts payable for the total of our supply purchases for the month. So now we're going to take a look at our cash payments journal. Any transaction involving a credit to cash would of course be in our cash payments journal. So anytime we're basically writing a check, it would be in our cash payments journal. And if you look on page 215, you can see what we're looking at on this slide. Gives you a lot better picture of it. And you can see on March the 2nd, we paid our rent, $1,600. And on March the 2nd, that was posted to our rent general ledger. And you can see for our post reference in the rent expense ledger, we put CP7, which means cash payments, page 7. And then in our cash payments ledger under the post reference, we put the account number 52, which represents the rent expense. The next transaction was where we bought some supplies, and so you can see we have or paid for some supplies. I'm sorry, one of our vendors for supplies, Graco Supplies, $1,230, and then on the 21st we paid Duet Business Services for the $2,800 worth of office equipment that we had purchased earlier. And you can see these are posted to the accounts payable subsidiary ledgers on the date it occurs. Now our other accounts, remember, those are posted on the date it occurs, so at the end of the month when we total these up, we just put a check mark under the other accounts column because those were posted during the month. And at the end of the month, when we total up the accounts payable and the cash columns, we post that as a debit to our accounts payable, which is general ledger account number 21 in our general ledger. And you can see where we posted that, $5,050. And then the $700 is a credit to our cash account, which is account number 11. And it's in parentheses up under the $7,700. And these slides just represent how that these are actually recorded and posted to the ledger. The other accounts, like I said, is posted on a regular basis, and we put the post reference in. And this represents how that is accomplished. And this shows on March 15th we issued a check number 151-1232 to Graco Supplies, and that would be posted on that date to Graco Supplies general subsidiary ledger. So at the end of the month, during the month, you can see that we put a check mark by Graco Supplies for the $1,230 and posted it to the accounts payable subsidiary ledger for Graco Supplies. And Now what we're going to do is just show how we journalize the remainder of those cash disbursements. So we've got those in our journal, and then they're posted to the subsidiary ledgers, and the other accounts is posted on the day it occurs. And check marks is for the subsidiary accounts payable ledgers, and then the other accounts is posted on the day that it takes place. The journal is ruled and summed, and by rule they just mean we draw a line under it and then we total it up, and we make sure that our debits equal our credits, and then we post the cash column and post the accounts payable debit columns, and put those reference numbers under there, and just put a check mark again under the other accounts column. And then at the end of the month we do the same thing with this that we did with our cash receipts journal. We want to make sure that that our accounts payable control ledger bounces back out to the accounts payable subsidiary ledger. And this is a form where we just, or a report where we show that these two do balance out together. Now we're going to take a look at another example exercise, and this one's on page 217. And you can see we have two transactions here, and these are from our, they want us to describe what's going on. So you can see on August the 7th, from Lassiter Services, we see a debit to their subsidiary ledger, and that's because we received $200 in our cash payments journal. And then on August the 22nd, you can see that we purchased $140 from Lassiter Services. And so if we look at our explanations, you can see we paid $200 to Lassiter Services on the 12th and purchased $140 of services on account from Lassiter on the 22nd. Now we've talked about the subsidiary ledgers for accounts payable and accounts receivable, but there are other subsidiary ledgers and other modified special journals that we may use, and we're going to spend just a couple of minutes discussing that. Business, it says, may modify a special journal by adding one or more columns for recording transactions that occur frequently. And probably one of the most common columns that we add is for sales taxes payable. You can see Net Solutions does charge sales tax on their services, and so in their revenue journal they have a sales tax payable column added. $4,500 worth of fees, and I think this said at 7%. Well, it must not have been 7%. Let's see. Well, it doesn't really tell us the amount, but you can see $270 worth of sales taxes payable. And then on November the 3rd, they had another $1,100 invoice, which resulted in, looks like 6% sales tax. Yeah, 6% sales tax, $66 in the sales tax payable column. And now we're going to take a look at another example exercise, and this is 5-5, and you'll find it on page 218 in your book. And we've got two transactions, and it says record these transactions in our revenue journal or sales journal, and these have 7% sales tax. And so 7% of $1,400 will result in $98 worth of tax. So it gives us a total invoice amount of $1,498. And then KJAM Enterprises had a $900 invoice, and we charged them 7% of that, or $63 in sales tax. So their total invoice, or what we debited our accounts receivable, is $963. And we're going to stop at this point, and when we pick back up, we'll talk about computerized accounting systems. Thank you, and We'll be back together shortly.